Alright, so in this video, I'm going to go over my portfolio with Questrade. So I've got 4 accounts with Questrade. I've got a margin account, Tfsa, RRSP, and RESP. So total equity across all 4 accounts right now is sitting at 103,666 as of November 20th. So Tfsa has a total equity of 58K, RSP has a total equity of 35K, margin has total equity of 2792, and RESP has a total equity of 7455. Let's go look at the individual accounts and see the positions. So in my margin account, I've got first this BABA put spread expiring January 15. So this was a rolled put spread. So this is an option selling strategy. And basically for me to win on this trade, I need BABA to stay above 230 come January 15. Right now I think it's at 270, so it looks pretty safe. And maybe I can actually close the trade earlier if the premiums permit. So in my margin account, it's mostly selling options. I've got another put spread on BABA for December 18. So this one's closer and the strike is higher and it's even wider. So the risk is bigger on this one. I need BABA to be above 250 come December 18. So this one worries me a little bit, but hopefully if we don't have any correction anytime soon, this one should be fine. I think this one I'm not worried about, but this one here I'm a little bit worried about, especially that it's 10-point wide. So the risk is bigger if BABA is below 240 come December 18. Then I've got a naked put on Chegg.com. So this was an earnings trade that didn't win, went against me. So I ended up closing the long side of the put spread and I kept the short put and I'm just rolling the short put. Right now, Chegg is at around 71, 72. I just need it to be above 75 by December 18 for this trade to be a winner. As you can see, I've got 2 put spreads on NVIDIA. So one has a November 27th expiry. So this one I opened last Friday and it has an expiry of next Friday. It's got a strike of 510 and 505. So as long as NVIDIA stays above 510, I win on this trade. I collected $1. And obviously my max risk is the difference between the strikes and what I collected in credit. So max risk is $4. So hopefully NVIDIA stays above 510 come Friday, November 27th. Right now I think NVIDIA is around 523. And this one was a put spread that it was initially at 535 short strike. It got completely tested and breached. So I decided to roll it to December 18. I increased the width of the spread. So I went from 5-point to 10-point. And I think I did it for a debit. I paid $1. So basically, I'm just trying to scratch this trade. I'm trying to break even on this trade. Basically, I just need NVIDIA to stay above 480 come December 18 for me to be able to break even on this trade. And finally, I've got a put spread on Tesla expiring November 27th. I opened last Friday when the market dropped in the last hour at a 460, 455 strike. I think Tesla's around 489 right now. So as long as Tesla stays above 460 come November 27th, then I win on this trade. I collected 95 cents. So in my TFSA, it's all dividend stocks. So I'm trying to buy dividend stocks, putting in $1,000 each purchase. So I've got Bell that pays around, I think, 5 or 6% dividends. I'm up $17. I've got Bank of Nova Scotia. I'm up $165. Pays around 5% dividends as well. Some of them are tempting. I kind of want to close them and take the profit, but the plan is to keep them for the dividends and not to take the short-term capital gain. I've got Choice Properties. I've got gold. This one's not for dividend. This is just to buy gold. And this is actually the only position that's down in my TFSA. I bought it at 179. I've got Manulife that's up $144. Great dividend yield. I've got MMP as well, up $126. I've got Realty Income up $25. I've got Pizza up $40. Ryokan up $239. So this one's my biggest profit in my TFSA. I've got AT&T that's down $2, and I've got TD that is up $93. So I get this question asked a lot: why would you hold US stocks in a TFSA when there's a 15% withholding tax? So the reason I buy them in my TFSA is because eventually I want to withdraw the dividends. So if they're in my RSP and I withdraw dividends from my RSP, they're going to get taxed when I withdraw them. So yes, right now I'm getting a 15% withholding on the dividends from US stocks, but at least when I withdraw the dividends, I can withdraw tax-free completely. And withdrawing dividends from an RSP does not count as dividends. It's going to count as regular income that gets added to my regular income. So then I'm going to get taxed in my regular tax bracket. In my RSP, I've got 3 covered call positions. I've got Rocket at 21.5 strike. I've got Virgin Galactic at 23. And I've got Slack at 28. So Virgin Galactic and Slack expire December 18. Rocket, I'm trying to take it week by week. This one expires December 4th. So you can see Rocket, I bought it at 21.67, but it's trading right now at 20.96. But I collected premiums twice on Rocket. So if I go to orders executed and let's filter on Rocket, you can see the first time, remember I bought it at 21.67, the shares, but you could see that my net debit the first time was 21.68. So basically I collected $1 of credit from the call premiums that I sold. And then the second time I collected 73 cents. So from November 13th to November 20th, $1. And then from November 20th to December 4th, 73 cents. Then I've got Virgin Galactic as well that expires December 18. I bought it at 23.6. It's trading at 23.3. And I've got Slack that I bought at 28.64. It's trading at 29.24. But you can see that I've been collecting credit from Virgin Galactic. So 40 cents, $2, 63 cents. Also, the first time when I sold it, I also collected $1.50. So same thing on work as well. Collected 70 cents the first time, 64 cents the second time, 85 cents the third time. And then come December 18, I'm also going to roll it again and try to collect more credit. So basically my goal is to squeeze as much premium out from these trades until they get called away. So obviously when I'm doing covered calls, I don't get the capital appreciation, but I'm getting premiums up front and as much as I can until I lose my shares. But if I want capital appreciation, then I should not sell covered calls because like it or not, eventually I'm going to get caught and the stock will surpass my call strike, because the consequence of selling a covered call is if the stock goes above that strike come expiry, you end up losing your shares at that strike. There are ways to avoid it, but it becomes hard to completely avoid it. You have to get lucky and the stock has to come back down. So in my RSP, I think sadly this is probably the worst position. It's a great stock, but for some reason it's dropping just because AMD is taking market share, yet Intel's revenue is more than Nvidia's and AMD's combined, yet Intel's getting destroyed. I bought the stock at an average cost of $56 doing covered calls. I had to go all the way out to February 19, 2021 just to collect 57 cents. So this one's not doing great at all. I'm down $1,000 on the shares, or actually $1,200 on the shares. Yeah, this one might be, I'll have to wait a while before Intel comes back up. So these are my positions in my Questrade portfolio. I am thinking of, in my registered accounts, to only buy and hold, no longer doing covered calls, just because I've seen a lot of my positions where if I had just held the stock for a year or two, I would have made way more. For example, I used to own NEO at $5. I had NEO, I had 400 shares of NEO at $5. And then when it dropped to 2.5 and I had covered calls on it, so I ended up selling it at around 2.5. Now, if I had just put in $1,000 back then on NEO and just held it and just never sell, I'd be up way more right now. My $1,000 would be worth $10,000 right now. So I think the strategy that I'm going to take in my register accounts is just to buy and hold growth stocks, but just to put $1,000 chunks at a time. And even if the stock drops, because it's only $1,000, I'm not going to care. I know that another position will make up for it. Same thing, I used to own Square at $60. Right now, it's almost $200. So I think this will be the strategy that I'll take in my registered accounts, but in my margin account, I'll sell options. All right, so if you have any questions, leave in the comment section below. Any suggestions as well, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.